All right, everyone. Today we're digging into a real head scratcher, MongoDB. I mean, the company just came out with a fantastic quarter, a total blowout by pretty much every measure, but then the stock just fell off a cliff. So what on earth happened? Let's get into it.
So first up, let's look at the revenue. We're talking a massive beat here. Wall Street was looking for one number, and MongoDB came in a full $25 million higher. That's not just a beat, that's an absolute home run. On paper, a huge signal of strength, right? And hey, the good news kept on rolling. It wasn't just about the sales. Look at the profits, the bottom line. They beat earnings estimates by a solid 17 cents per share. Now, yeah, that's the non-GAAP number, which basically just gives you a cleaner look at their core profitability. So you've got a top-line beat, a bottom-line beat. Everything's looking rosy, isn't it?
Well, hold on a second. This is where this story gets crazy. After all that good news, the stock got absolutely hammered in after-hours trading, down over 24%. 24%. So what gives? Why would a company with such a great report see its stock just implode? That's the mystery we're here to solve.
Okay, so let's unpack this. And to really get why the market reacted so violently, we first have to understand just how good this quarter actually was. Seriously, on the surface, it was a stunner.
I mean, look at these numbers. Revenue was up a whopping 27% year over year. Their cloud product, Atlas, which is really their engine for growth, grew even faster at 29%. And get this, it just crossed a $2 billion annual run rate. That's a huge milestone. On top of that, they're gushing cash, $177 million in free cash flow. They added 2,700 new customers, and they closed two of the biggest deals in the company's history. You literally can't ask for a better quarter. But, and you knew there was a but coming, Wall Street is a what have you done for me lately kind of place. Or more accurately, what are you going to do for me next? And that brings us to the guidance. This is the smoking gun, folks. The whole reason for the sell-off. And this slide just lays it out perfectly. It's so simple. You've got the past on one side, a fantastic 27% growth rate. Then you look at the future, what they're guiding for, and it's like hitting a brick wall, a screeching halt down to 16 to 18%. That right there is a massive deceleration. And for a high-flying growth stock, hitting the brakes that hard is the ultimate red flag for investors. And if we drill down into the actual numbers, you can see exactly why the alarm bells started ringing. The full-year revenue guidance confirms that big slowdown. But look at the next quarter's earnings per share. They guided just a penny below what the street was expecting. Now you might think, what's a penny? But for a premium-priced growth stock, any miss on guidance, even a tiny one, is a huge deal. It forces the market to completely rethink the company's entire growth story.
So you had the weak guidance, which was bad enough. But then you had the earnings call. And let's just say management's commentary didn't exactly help calm things down. It actually threw more fuel on the fire.
Yeah, so right in the middle of all this, the CEO announces a huge shakeup in the sales leadership. The president of field ops and the chief revenue officer are both leaving. Now, they say it was planned, but they also admitted they're still searching for a new CRO. That is not a good look. When you're guiding for slower growth, the last thing investors want to hear is that there's uncertainty at the top of your sales team. That just screams execution risk. At the same time, though, management was trying to paint this really exciting, long-term picture around AI. The CEO said that one day, AI agents will love using MongoDB just as much as human developers do today. And hey, that's a cool vision, right? Positioning themselves as the database for the future of AI. But here's the rub. In the very same breath, they had to admit that right now, AI is basically contributing nothing to the bottom line. It's not a material driver of results. And that creates a massive disconnect for investors. You're telling them the near term is slowing down, but asking them to get excited about a far-off AI dream. Wall Street wants to see the money now. So you add it all up, slowing growth, a leadership shuffle, and a jam tomorrow story about AI. What's the final verdict from the market? You have to remember the context here. Look at this chart. Even after this massive drop, the stock was still up over 21% for the year. It had been on an absolute tear, crushing the NASDAQ and other software stocks. So what does that tell you? It tells you that perfection, and then some, was already priced in. The expectations were sky high, so any little crack in the story was bound to cause an earthquake. And that's really the bottom line. In one night, the market's entire focus shifted. It stopped rewarding MongoDB for its amazing past performance and started punishing it for its future risks. The stock was fundamentally repriced for two things: that sharp slowdown in growth and the new uncertainty around who's going to be leading the sales charge. So that's the what and the why. Now for the big question. What happens next? Where does the stock go from here? This is our take, what we call the next call. Okay, so here's our thesis in a nutshell. The market has done its job. It has aggressively repriced MDB for this new reality of slower growth and execution risk. The big reset has happened. So, what's our prediction? We think the stock is probably going to be stuck in the mud for a little while. Expect some choppy, sideways action as the market is in wait-and-see mode. What's the catalyst that could change things? It all comes down to one thing: Atlas. We're going to be watching those Atlas consumption trends like a hawk. If we see signs that growth is stabilizing, or even better, reaccelerating, that's the signal the worst is over. So for our official rating, we're calling this a market perform. The valuation is a lot more palatable now, but that overhang from slowing growth and leadership questions is going to act as a cap on the stock's upside for now.
And of course, as always, we have to say it, this is not financial advice.